Hi, good afternoon everyone. Welcome to my channel. My name is D Mija. I'm a full-time derivatives trader and an investor, and I help people build their mutual fund portfolios. I am a mutual fund distributor as well, NISM certified, AMFI registered, and I tell people about how I see the markets and what is in store for the next week and the coming days ahead. So today is 10th of March, and today was okay day, I would say, though the market is showing some weakness after it opened up, and in fact it went up after open. It didn't open up, it went up after open, and it was a very sharp up move. But that up move did not last at all, and we saw a very sharp sell off from a point where Nifty had taken 10 days support, and from that point it could not clear, and from that point it immediately fell down, and I will show you in charts how it played out. But there has been some amount of weakness that is starting to get shown now, both in terms of the options data as well as the charts. So I will take you through all those things and a couple of interesting things which I found out today, which were in the news. So I will take you through them as well. So here we start. We'll start off first with how the Nifty has performed. Now, if you look at this is the Nifty chart for intraday today. Now, if you see over here, this is what I'm talking about. In the morning, there was a sharp up move. We opened somewhere over here, which was kind of flattish to slightly down. But there was a sharp up move, which took us straight to 22,700 odd. Now, this blue line I will show in the next chart is the place where Nifty had bounced for almost 10 days. It took support over here. But anything that becomes a support becomes a resistance on the way up. And post that, there is, as you can see, it tried to hold in a range, and then there was a sharp sell-off post around 1 o'clock. And we are now trying to recover. There is about 30 minutes still to go. So let's see where we end. But this sell-off was not very pleasant, to say the least. And in this particular sell-off, there have been a lot of small mid-cap names which have got decimated 5% today also. Now this is the daily chart which I was talking to you about, and this is where Nifty had taken support for almost 8-10 days. You know, it kept on coming over here like this, and it finally broke this with a gap down. And I had said that time also that when there is such a strong support, then usually a gap will only break those particular support levels. So that is what it got broken in a gap. And today, as we can see, that we tried to again break that level, but we were not unable to break that level. Yesterday also we tried to get onto that level, but we were unable to break it. So if we keep on pushing around it, so at some point in time we might break it if the movement has to be on the upside, and then this particular line becomes, this slanting line becomes very important, because this is the lower low lower highs line which connects all the previous tops. So if we are able to cross this, then yes, we can say that, you know, there is some strength. Otherwise, if it goes down, then the first support is going to be 21,800 odd, and then the last support is going to be 21,200 odd, which was the election day low. So this is where Nifty is placed precariously, and I had said the same thing on Friday as well, that is this particular leg of the up move over. We will come to know in the next few days, depending on how the movement of the market is and how the open interest etc plays out. So I will share the open interest also. Now if you look at the open interest right now, open interest has gone from 1.08 on Friday to 0.78. So there have been huge calls additions that have happened today. So a lot of people are piling on the calls. So they have a very bearish view on the market, and it was about 11 crore calls to 12 crore puts on Friday. Now it is 17 crore calls versus 13 crore. So about 6 crore calls have been added versus hardly any puts, 1 crore puts. So this is not very bullish. It is in fact quite bearish if you ask me. And a lot of it is also stemming from the fact that US futures right now, as I speak, are down hugely. They are down by almost 1 percentage points. So when I take you through the international markets, I will share that perspective. Now this is how the straddle premium have behaved today. The Nifty straddled opened at about 254 odd, and there was a very nice decay actually till about 115. So all the option sellers were in good money, I would assume. But then came the spike, and now we are what we would be closing at 10-15 points decay, which is hardly anything. So it's not great news, the way the market has fallen, but let's see whether it holds or not. Now let us look at where we are in terms of the fall from 52-week high. So Fin Nifty is the best performing at minus 8.5. Nifty is again going back to that minus 15%, which it had crossed a couple of days back. Apart from that, pharma, IT, all are sub 20%. Mid cap is sub 20%, while small cap is now sub 25%. It is at 22.5. It had gone to almost 25, 26%. Right. Nifty next is now again touching that minus 25%. It had gone to almost minus 27, 28%. PSU banks and PSC are now sub 30%, so which is okay. Realty is minus 30% down, so one third of realty is gone from their highs. Momentum is down minus 30 and alpha is down minus 31. So this is how the fall of the indices looks like from the 52 weeks high. Now let us see how the indices have performed. Now if you look at the worst performing index, small cap and mid cap, these are the two ones which have performed the worst today. Now basically this is showing that there is not too much strength in the market, and I have been maintaining that going ahead into the next year, we can expect small and mid cap to underperform the large cap simply because of valuation. Valuation wise, they are one standard deviation ahead of their mean, and they are still very expensive. Typically these small and mid caps tend to bottom out, at sub 20 kind of PE. They are much ahead, north of 20 PE right now. So there could be a lot of pain there. Large caps look more reasonably valued as of now. Now you look at the other ones that have been falling: PSC, auto, infrastructure, all these names which are high beta names have fallen more. Where is the support coming from? A little bit from FMCG, which is good news. FMCG could have bottomed out if you ask me, because FMCG stocks have corrected so much and they have been underperforming for such a long time that at some point in time there could be some value emerging in them, and especially with the focus on consumption, etc. There could be a case made out for FMCG having already formed a bottom. I don't know, but this could be one of the theories that we can think of. Now coming to the heat maps, how the heat maps look like. So this is Nifty 50, which have been the losers today. Aisha Motors down 2%, Hero Motocorp 2%, Titan minus 1.6, ONGC was a big one, almost minus 4%, Trent minus 4, BAL, BPCL minus 1.5 each. Lever was up 2%, which is good. And this is your IndusInd Bank. So IndusInd Bank is down minus 4%. I think there was some news regarding the CEO, etc. Getting an extension. This is the Nifty next. DLF minus 2.7, IRFC minus 2.9, Lodha minus 3.3. So all realty names falling. REC minus 3, Canara Bank minus 3, PNB minus 2.8, IOC minus 2.5, TVS Motors minus 3, Naukri minus 3.5, ABB minus 3, JSW plus 2.69. Now coming to the broader markets, there are stocks which have fallen too much. So no point talking much about this particular segment of the market, but let me just see if I can pick up. Yeah, so this is the banking and financial of the broader indices. This includes your names like 361, which have fallen. Angel has fallen minus 2.5%. PNB Housing minus 3.7%, CDSL. So all the capital market plays again are falling. So they are now linked with the market. When market goes up, they go up. Market goes down, they're going down. So there was a lot of red in the broader market. Sufficient to say you can see very few green names today, like Power Grid plus 3%, Solar Industries 3.5%, but all the others are hugely in red. So I suppose there were more declines than the advances today. Now coming to how the international cues are stacked up for today. Now, as I said, that Nasdaq futures, as you can see, is down minus 1%, and also same is with US 500, that's down almost minus 1%, and US 30 is also down minus 1%. So US is right now indicating a huge gap down. Now let's see whether that fructifies or not. The big story also is in terms of Bitcoin. As you can see, Bitcoin has fallen to almost 80,000. So this is a huge drop. The cryptocurrencies fell off a cliff over the weekend. They were down 5-7%. If you look at oil is almost breaking 70. So which is good news for us, but not good news for the global economy. and our currency continues to weaken. I don't know why. When dollar index is at 103, our currency should have been more stronger, but it's at 87.3. Gold is above 29 and silver is at above 33. So they both are going very strong, but rest of the world is in some sort of a problem, it looks like. Now coming to some of the stories that caught my eye today. This was that India's valuation edge over US stocks disappears for the first time in 15 years. This was article carried out in Money Control today. So basically what they're saying is that India's valuation that they used to get Indian market over US market has actually gone away, which is true, because US market has not been correcting, Indian market has been correcting. So I wrote a post also on this on Twitter. If anyone wants, they can go and read it over there, that for the first time since 2009, Sensex P is at 21.8 times, down from 26, while Dow is at 22. So basically, all of this is also indicating that somewhere the US markets are overly valued, right? And as I have maintained before, in fact, in my last video also, I had said that US market is 70% of world market cap and only 26% of GDP. So that will correct at some point in time. So US markets correcting will also take down the entire world market along with them. How much we fall, I don't know, because we already corrected so much. But of course, there's going to be some collateral damage that happens when the mother market falls down. So we also might go along with that. But US markets dominance, etc., there is a limit, right? Because if you're 26% of world GDP, either you increase that number, you go to 35-40% of world GDP, which looks very increasingly difficult. Then yes, your market cap can sustain. But otherwise, 70% market cap, at some point in time, the markets are going to correct. Now, very interesting thing today, one more thing I would like to share with you. This is a chart that I've shared on Twitter again. This is a chart that was shared by Anup of Capital Mind. What this chart says is that what is the average fall from 52-week high of all the stocks with particular ownership of greater than 20%. So stocks in which retail has got a greater than 20% share have fallen on an average 44%. Stocks in which domestic mutual fund have a stake of greater than 20% have fallen 34%, while stocks where FIs have got a 20% greater than 20% stake have only fallen 29%. So what basically this chart shows is that the higher the retail stake has been, the more the fall has been in those particular stocks. Now what does this mean? This can mean two things: that either retail is not holding high quality stocks, or the way retail is picking up stocks are the ones that are falling the most. In either the scenario, it basically goes on to show that retail people are best not to dabble into stocks directly, right? And especially names which are not high quality names. And this data basically shows that. So for what should retail do? My suggestion to you all is that don't venture into direct equities, because what happens is that you will be tempted to buy shares when they are at their peak. You will be tempted to buy stories. You will be tempted to buy order books, which might or might not materialize. And when the market goes down, there is no exit, because these stocks then fall the hardest. And this has been shown again and again and again through a lot of data. So for retail, it definitely makes sense to go via the mutual fund route, via the ETF route, via the indexes route, but not by direct stock route. Until unless you know that you're buying a company for a particular value after that it can reach after 5 years or 10 years, and you're convinced about it. You track the management, you track the con calls, you track the results. I mean, basically, if you're full-time into it, then it's a different story. Otherwise, a mutual fund manager does a very good job of it. They're paid to do this, and there's a lot of funds do a very good job of it. So it's better to invest through mutual funds. And as I have said before, that if anyone is interested in investing in mutual funds, please contact me through the Google form below. A lot of people contact me, and it's great. And I help people even to analyze their mutual fund portfolios and see. So some of the people, I was quite impressed today. I checked up a couple of mutual fund portfolios. So people are doing very well, even in mutual fund portfolio, the way they have constructed. It's quite good. So my advice to you is spend more time researching mutual funds rather than researching stocks, right? The chances that you will get that one particular 100 bagger is almost impossible. And even if you get it, what are the chances that you'll be able to hold through it when it goes through 50% correction, 60% correction? Most of the people will exit it. So it is much better to invest in a mutual fund and see your money multiply, because a lot of mutual funds also give 20% CAGR over last 20 years. If you can get that kind of money in a mutual fund, why on earth will you directly go and invest in stocks? So if anyone is interested, please fill up the Google form below, and please leave your contact, and I shall contact you back. And yeah, so now, how does tomorrow look? Let's see. Depends on the US markets. The open interest is not very bullish, so we might be under pressure. We have already made a bottom of 22,420 odd. Let's see whether that holds or not. If it doesn't hold tomorrow, then we might test our previous bottoms as well. But the market was looking all right till a couple of days back. But if this is the maximum that the markets can recover to, then God save us, then we are looking at much more deeper cuts. But let's see. I don't know whether we are going to do that. We are probably going to be in a range that could also play out, and one day up, one day down, and kind of meander in that range. Because also what had happened is, in the last 5, 6, 7 trading sessions, we have also covered almost 800,000 points from the bottom. So which is also quite a big achievement. So even if we give up 200-300 points of that, should be okay. So let's see how it plays out. Let's see how the global markets play out tomorrow. And tomorrow will be Sensex expiry, and we shall see how things turn out. So that's it from me now. If you like the video, please do subscribe to the channel. Please share your comments. I love reading your comments, and I shall see you tomorrow with another update. Take care. Bye bye.